Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, July 11th. Mostly lower trade here across the ag space this morning as we await USDA production and WASDE data, that at 11 o'clock Central Standard Time. Corn, beans, wheat, all let's call it 2 to 5 lower. Bean meal is actually up a little bit, while bean oil is down about 25 to 30 points. U.S. dollar, crude oil, both slightly higher, while the U.S. equity markets are down about 0.5%. Late yesterday, President Trump threatened to tack on 35% tariffs on imports from Canada. However, goods that comply with the nation's free trade agreement would be exempt for now. Trump went on to state that all of the trading partners that have not received notices earlier this week would be subject to tariffs, likely somewhere between 15 and 20%. U.S. weather remains non-threatening into late July. 24-hour precipitation maps show a heavy line of rain starting yesterday in northeast Nebraska, moving across central Iowa and northern Illinois overnight. Yesterday's updated drought monitor continues to show moderate to severe drought levels still lingering here in northern Illinois, so I think these rains would help go a long way in helping ease these drought conditions and raise yield expectations. Temperatures across much of the nation's midsection are expected to hold in a normal to below normal pattern over the next few weeks. U.S. export sales remain strong as Brazilian basis levels remain elevated despite expectations of record production. Yesterday's export sales showed year-to-date corn commitments up 28% from a year ago versus USDA forecast of up 16%. So look for a boost to that figure today. Bean exports running 12.5% above a year ago. USDA is up 9%. While wheat, they're up 9%. USDA forecast up just less than 1%. The Brazilian real has begun to back up here a little bit after reaching a 9-month high earlier this week. In today's USDA reports, I would expect a slightly lower corn stocks, slightly higher soybean stocks. I would not expect to see any yield changes in today's report, allowing both corn and soybean production to back off a little bit, this due to lower acres. I believe you have to go back to 2003, the last time USDA raised corn yields in July. They have, however, lowered yields twice in the last 15 years. I'd be most eager today to see where the USDA puts the Brazilian corn production figure at 130 million metric tons. We are now below CONAB's estimate. Now they're at 132 with yesterday's revision. Most private guesses are coming in between 135 and 140, with one as high as 150. So also eager to see what impact this will have on new crop export demand, which I think is going to be lowered. Whether USDA raises yields today or not, the market will likely just continue to trade a yield above the current 181 million bushel per acre estimate. I think production is market's trading a figure closer to 16 billion bushels, with stocks in that 1.8 to 1.9 billion bushel level. I would not expect any big changes in the bean balance sheet. Look for the USDA to reshift some bean oil demand back away from the exports and into domestic usage for biofuel production. And unless we see Midwest forecasts turn hot and dry as we look out into early August, I would expect bean futures to begin to challenge those lows there back from in April. Wheat production in Western Australia expected to slip rather significantly this year, down 24% to 9.4 million metric tons due to harsh weather conditions. This while Russia is looking to beef up their agricultural exports, which have been off to a slow start to begin the 25-26 marketing year. The Ag Ministry recently eliminated their wheat export tax, at least temporarily. For today's production report, I expect all wheat production to come in just over 1.9 billion bushels, and I'm about 10 million below the average trade guess. Thanks for listening, everyone. I'll be back later with a summary of today's USDA data.